Hey there, Jedi Traders. David here of TradingFibs.com to bring you the market outlook and recap for the week, finishing up week 11, March 18th, 2016. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. To support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. What a week, as FOMC meeting came out with their minutes on Wednesday, and not minutes, announcements, and then went ahead with end of the contract quad witching today. Quad witching was today, Friday, March 18th, and what a Thursday price action we had. Really, that was the trade of the week. Let's jump right into that. As always, you feel free to come by at tradingfibs.com to check out my trading session focus, market each weekly, futures, ETFs, and market cap leaders. We'll go ahead through that at the end, but jump right in. It was all about the YM this week, and week 11, as in the live trading room, we go ahead and rotate one index per week. And this week we were on the YM. Again, next week we'll be back on the ES. It was 11 setups this week for a total of 476 ticks total. Again, you can scroll through the days, get the highlights. You're always free to jump by at Trading Fibs Twitter or on Stock Twits to see any of the highlights or more of the tweets sent out during the week. So again, feel free. And then at the very end, big picture wrap up there, as we'll go through some of the charts there. Let's jump right into one of the best trades of the week. It wasn't just on the YM, but being that the YM was the index of the week that we were trading, even though we watched the other indices in the trading room, here it was on the YM on Thursday, post FOMC minutes. I'm sorry, I keep saying minutes. Minutes aren't coming out for a little bit. It was the announcement after the meeting on Wednesday. Here we could see right off the 80% projection level, a little bit of an earlier entry, but the best entry was right here at about 1027. But again, an early entry back here, and it was all the way up. I know price action even continued further. It was a little bit of a piece of the pie, but first contract off, rolling on two contracts up to the fib projection level, and then the second one on the crosstown. What a great move for the week, and that is what we're talking about, long trend moves, intraday, daily, weekly, whatever that is that you're looking at, options traders, there are charts for you based on the T3 trading strategy. Let's jump right in. Also, as we can see here, on the intraday basis, what does it take to remain in a trend? A little bit of a hybrid of a chart this week, testing out some new ideas here by throwing on a 10. This is a 10-7 flex Renko using the Sierra Charts platform. We have a 5144 here. The background green color indicated by the 50 above the 144, and then we have the T3 moving averages crossing upside. Throw a 13 exponential moving average. That's right, a 13 exponential, a Fibonacci number, and you have numerous ways to remain in a trend. An article I'll be writing up here soon will be posted on my website at See It Market and other various sources out there. But again, you have a variety of ways to stay in the trend. This was the trend of the week. Looked great. T3 moving average crosses upside, remains in the trend above the 13 EMA. Why would you exit this trade? Why would you exit? And, well, obviously you have some reason to exit out of a trade, but the question is, why didn't you stay in the whole time? All right, so that's mindset. That's what we do in the trading room. We talk about that. But again, it's about a piece of the pie and what keeps you in the trade as long as possible, but identifying the highest probability. But if it was in the YM, it was also right there on the ES. So for all you ES traders out there, there was the move. A little bit of a different time frame as the 5-4 Flex Renko works a little bit better. Numerous opportunities, but again, 1, 2, 3, 4 throughout the session. $12.50 a contract to keep you in the trend. If anything, you might have exited over here. Re-entry on the buy signal to the upside. Exit on the red. Re-enter on the buy signal. It was all to the upside for that Thursday trading session. What a week it was to finish out on quad witching. All right, let's jump right in. Week 11 here. Let's take a look. We got some new charts up. We used to look at the market profile with the daily gaps. Now I've separated the two. I now have some charts to show you just the daily gaps, open gaps. So the daily gaps represented by the turquoise lines here, and then the open gaps highlighted here as indicated here on the crude this week. We're sitting down here a couple weeks ago, down in the beginning of February. Now we're in mid-March. And price came down to a low of around 28, 27 and starts working its way back up. So if the bigger trend is up there, and I'll show you that on the long-term charts, but again, from just a gap, open gap closure, look exactly where we went this last week. We closed that gap out at 38.31. That's right. That regular trading hours gap, again, we know that we have Globex sessions, but I keep the regular trading hour charts open to show that gaps all eventually get filled, especially on the indices. And so price action here on the crude running all the way up to 38.31, closing that out last week. Price action coming back down, retracing, and then back to the upside. I did have a Fibonacci draw. I'll show you this a little bit later. But again, weekly opening price here on the crude, 37.40, and finishing out up here at 39.34. But what a run for 2 weeks to close out, or more than 2 weeks to run and close that out. But open gaps all eventually get closed. And as you can see, we don't have anything to the downside for now. That's good news. Daily TF, let's go to the Russell. Russell here again with some numerous gaps to the downside, 1025.7, 987.1. We do have a serious gap down here at 968.10. I hate to tell you this, guys. That's right. The Russell will eventually come back down and close that out. I have no idea if it's going to be this year. Hey, who knows? Election year, Feds, keep it up. I can't tell you where we're going. All I can tell you is trade the charts in front of you. But we do have an open gap down there at 968.10. So all the naysayers and pundits and everybody says that we should be coming down. Yes, you are right. At some point we will come down. But right now we are holding to the upside. Weekly opening price here at 1077.9, finishing out at 1096.6. We do have another open gap up here at 1124.7, which I believe will eventually get closed to the upside as well. Let's jump into the daily YM. Opening price this week, 17,055. That was the index of the week. Closing up here around 17,491. Closing out, that's right, this week, just like crude, closing that open gap from December 31st, 2015. Yeah, we still have that open gap down below, 15,838, and leaving some turquoise lines, which are open gaps, which we do pretty good on a daily basis. We close them out, but eventually those open gaps will get those daily gaps will get closed. It's what I really pay attention to are those white lines, the open gaps. So one up here, 17 to 11 closed. Yet we still have one down at 838. Unfortunately, yes, market will come down and close that out. So expect some type of retrace at some point. Daily NQ. Here we are with open gaps upside, 45.73, 46.37. Eventually those will get closed out. But it was this week that we closed out the 43.94.50 as price action rose from 43.45.75 to close it out around here at 43.94.75. We still have a nice open gap down here from mid-February at 40.11. So eventually the NQ2 will come down. As the NQ, you'll see on the Fibonacci chart, we're at a key resistance level, 200 period moving average, and I believe a 61.8 Fibonacci. So can go either way. Daily ES jumping right in. Price action up here with leaving some open gaps. 2037.50 is the close for today after an open at 2006.25. That's right. Look at that. Closing out that open gap from 2021.25. Those are the key lines right there. Yeah, you were down here in mid-February all the way down in 1810. You were thinking, no way, we're going back up to 2000. And there we went, right up, rallying to close that gap. Adding to our new lineup here on the Trading Fibs trading room, we're taking a look at the 6E lately. The euro, a couple of updates need to be done on the charts, but let's just jump right into the daily gaps. As we can see, we have a major open gap down here on the euro, as we've seen for majority of February and beginning of March, we were in a downslide, coming back upside as price action leaving some gaps in the background. Eventually, 109.085 and 106.935. Eventually, price action I could see coming back down again. And I have not kept data on the euro for too long, so eventually over the weeks, as we continue to look at it in the market outlook and recap, we'll add some more lines, but right now price action again, just like the other indices, will eventually come back down. And looking at the daily gold, we can see price action with a weekly opening price here at 1257.2, pretty much closing out the week even. And we've seen a little bit of resistance up here at the highs. We do have open gaps all the way from 1198.10 down to 1063.4. And the last index that we'll be looking at starting next week will be the DAX. So we'll be adding that to the lineup. Let's jump right into the volume profile. Again, my preference is to watch the volume profile versus market profile, from just the preference alone of knowing that how much price traded at a certain, not time, but how much volume was there at a certain given price. So if we stayed at 44.0325 all day, well, of course, all the volume profile would show at only one price. But we know that there's a range every day. We know that there's a value area high, a value area low, represented by the orange segment on the charts in front of you. We also have the outlier above value area. Price action a lot of times can tell us a lot, but again, I'm not trading off of it. I do use it on an intraday chart. Wonderful study here on the CR charts that you can overlay the volume profile, just like you can use an open range. Value area can migrate from there. Sometimes it can be a resistance, but momentum is momentum. It usually can push away. What really sticks out for me are the 600-day major VPOCs, and those are represented by the gray lines that you see here. It was the YM almost coming up to 17,548, and so as price migrates back there, what it's obviously telling me over the last 600 days, the mean trading price is 17,548. It's like a magnet, it pulls it back. And so again, just like every intraday, we will move away from point of control, but value is seen within this range. And so as on the YM, the TF migrating up to 1136.9, the NQ here with a value area, actually, I'm sorry, I'm VPOC down below at 4257.50, the ES up here at 2066, and crude up here with 5136, 600-day VPOC. Again, like daily gaps, like open gaps, like TPOCs, VPOCs also are a level each day that I watch in the market to see if they get closed out. It's not always a science to say they exactly hit the line. A lot of times when they come even close to it, like any target, if you're trading with a target, you always front run it, you take your contracts off, or you end the trade. All right, market profile again, I just want to go ahead and just show that to you. Again, these were the charts that we used to have the daily gaps on. Lighten it up a little bit. Here we can see price action today, ending off the week very much inside trading after that wonderful run yesterday after FOMC announcement. Again, we have the meetings that come out in a little bit, but there it is, the same thing as V profile, VPOCs. As we can see, we have TPOCs both above and below, a range on the CL up here from 47. Again, these are the current contracts. We're looking at June contracts, and CL front running the month as we have all the way back down to 29. So these blue lines all representing, and again, I have all the range here. So as the YM continues to push upside on this contract, 1749, you can see, and just as we saw in the daily gaps, we still have some lines that we're eventually going to come down and grab again. So for every downturn, there's always a rally. So whatever your bias is in this market, if you think this market should be up, if you think this market should be down, it doesn't matter. 50% of us will get it right, 50% will get it wrong. All you need to do is watch the charts, look for the highest probability setup, whether you're an options trader, short term, or intraday. Look for as many charts to be in sync, watch your setup, and you'll be in the trade. And again, it's like anything, there's a probability. Nothing is 100%. All you can do is hopefully get the run. All right, let's jump right into the long-term pictures as we see crude here on the Fibonacci setup. As I said before, price action now breaking above the 50. Price action right now here at the 50%, Fibonacci retracement 61.8 and 200 period moving average up above. And if we go back to the daily gaps on the crude, remember what I didn't show you here is that daily gaps, $43.99 is the next level up. While we have levels at $50 and $80, whether or not crude will run up to that now or in a couple years, trading the intraday charts. Obviously today a nice pullback after a couple days run up, but if we are heading higher based on the shorter term picture together with the intraday, I believe $43.99 might be a key level. And again, if you go back to the volume profile, we know that crude 51.36 might be a level upside, and again, market profile on the crude as well has levels to close out as well. So that's how you put this all together. So taking a look at the long term crude, we know we're at 50%. That can be a resistance. If we break that 44.19, 61.8, we can run this up higher. But again, these numbers as we approach are kind of merging into other lines that have been there. So again, that window around $44 to $50 could be a potential for crude to run up. We got a zone here between the 50 and the 200. Now, taking a look at the other picture, so again, the 4-hour, one of my favorite charts here with the T3 moving average sitting upside in an uptrend. Again, 50 above 144. This is the same exact chart. This is the same exact chart that I just showed you guys back here on an intraday basis. This is a 51.44, 10.7, but this is on a Flex Renko chart. Now, if you go to the longer term chart on a 4-hour chart, you can see that whether you're an intraday trader or whether you're perhaps someone who's holding this on, an options trader, or you're holding on for a couple weeks, you can see how the 4-hour chart might keep you in the position a little bit longer. So here we have for the majority of March since 3/1, price action's been holding up on the crude with a pullback, but the 51.44 has all been upside. Technical momentum is bullish. So when I have a 50 tick range chart in the green and I have a 4-hour T3 moving average, all I did was superimpose this T3 moving average on this chart right here. I have myself a wonderful move here, and so price action staying to the upside here. And again, on a daily basis, we have a change in trend. Price action holding above the 5 SMA, holding above the T3 moving average is still upside. And for the first time in weeks, a final change in trend on the weekly. So monthly is going to take us a while. So as long as we continue this uptrend in the green, we're going to go grab those 44s. We have that 61.8. Otherwise, I could see us coming all the way back down, possibly retesting the 50. Watch for the 50 period moving average set here on Friday, March 18th, around 38 and as low as maybe 35.96 and 33.96. Again, as price action moves next week, those numbers will change. Taking a long-term picture at the Russell as price action settles right here around the 61 point almost Fibonacci number. We're sitting in between the 50 and the 200 period moving average up here at 1134.6. So I could see the Russell. Obviously, we do this together with the ETF. So I'll take a look at, I'll show you where you can find that information on my website. But based right now, just on the futures alone, price action, again, masking a lot of what the ETF is doing as price action is rolling up here, 1100.2, 61.8, resistance. Again, we have this window. Do we break through this? We change trend. Do we find the 200 period moving average and we find that that's where we settle? Okay, that's where we settle. We know where the daily gaps are. We know where we VPOCs above. We know what lays ahead. But as long as price continues and breaks these barriers, the trend will continue. Now, what will get us up there? Once again, that 4-hour chart superimposed by the T3 moving averages together, and then a 50 tick range chart to the upside. So as long as we're all green here, we continue to the upside. Again, weekly and daily, all in the green, no question about it. Monthly is going to take a while. So as long as the rally continues, guys, somewhere along the line there'll be a pullback, so you'll watch for price action to come down here on a 4-hour chart to around 1073.8 or 1054.5. Again, these numbers will change through the week, as low as 1020.3 on the 50 period moving average. But remember what I told you, this rally can also end at some point, and we can come down and retake some of those lows and close those out. Eventually that will happen. I don't know if it's going to happen right now. All I can tell you is trade the charts in front of you on an intraday basis. Jumping into the YM, no Fibonacci retracement. We broke that 61.8. As you can see, price action here on the YM breaking above the 200 period moving average here on the June contract. here on a daily pick, regular trading hours. Again, we already saw those open gaps closed out, but we do have some numbers down below that eventually we will go close. So YM, all in the green, closing out quad witching week. T3 moving averages holding upside above the 51.44. If price action comes down, look for around that 17,200, as low as 16,880 on the 200 period moving average. If we continue downside, 4-hour chart, watch the 144 and then watch the 50 period moving average for some support. Again, daily and weeklies are all in the green right now. Boy, we haven't seen this for a long time, where the shift in the technical momentum is in the green. It's going to take us a while to get back in the green on the monthlies. Long-term NQ, again, we're looking at, if we go back to the daily gaps on the NQ, if you remember, we said price action came up here and closed out that gap at 43.94.50. And so now looking at the long-term NQ, check it out. All lines up, 61.8. We got a 200 period moving average here at 43.95. And so again, this is some serious resistance here. And again, we know back in the daily gaps that NQ has definitely some room to the upside, but we also know it has room that it can come downside. So right now, just on the technical momentum finishing up the week, we know we're a little bit choppy today. Hey, that's quad witching week. But the bigger picture on the 4-hour chart is we're sitting upside, and the monthly here is going to obviously take some time, just like the other charts, and then daily and weeklies holding upside. Weekly actually just a little bit. Weekly actually, and I'm sorry, on the weekly, I apologize, jumping to conclusions there. While the other indices have all been upside, it's the weekly that's just about to turn itself around. Another positive week, and we'll break that barrier. So again, we're not there on the NQ yet, but definitely for the short term, we're definitely holding upside. Again, we can pull back. We can pull back to a former fib line. We can pull back to, I will watch for the, if we're going to pull back next week at all, 4-hour chart, watching the 43.56 as that will move up. Watch the 144 on a 4-hour chart, and then obviously all the way down to the 50 period moving average on the daily charts here. All right, jumping into the ES, the index that we'll be trading next week in the Trading Fibs trading room. We've broken above that 200 period moving average on the June contract. Now, I drew a fib line here as if this is the high for some reason, if this is the high and we're not going any higher, that I believe that we will watch price retracement. First of all, we have a 200 period moving average that we can bounce down to, and also the 50 period moving around 1916. But again, if this was the high around 2043, we'll watch for the price retracement back to any of these levels. Again, 50% right now, lining up with about the 50% moving average. As long as price may hold on here, this 50 period moving average might line up with the 38%, and we'll just have to see how the other indices are doing. So that's where the support is. Again, the 4-hour chart combined with the daily chart makes a good tandem chart here to see are we going to hold up. We see the daily and the weeklies all holding up. Here we are, T3 moving averages on the daily holding up. We have the daily on a volatility chart here holding above the 5-period SMA. And also here on the weekly, this is the first weekly that we've gone green in a while. So the NQ lagging behind, but again, bigger picture is upside, monthly catching up. 4-hour chart, watch for the pullback if we're not going to go higher. Watch for the 200 period moving average. Obviously, if we go any lower, watch for the 50 period moving average and the 1974, or as the week moves on, watch for that to migrate up. Again, if we go back to the daily ES, that's what we'll be watching next week. We know we closed out the open gap. Does the ES have anything else upside? No. So I could see possibly the ES coming up here, perhaps to the highs up here, retesting those levels up there. But eventually, price action, unfortunately, the ES, I see it coming back down to at least that 1851.75 and closing that out. Now, hopefully it doesn't happen right now. Hopefully we stay in this rally and continue upside, or at least have some healthy pullbacks and then migrate upwards. But again, it's the left two upper charts here, the 50 tick and the 240 together with the migrate. Now, heading into next week's recap, I'll most likely remove this chart, as now I'm pretty confident in having the T3 moving average overshadowed on the 51.44. So I really do like that. So we're just going to most likely superimpose that chart and remove it. And now we have ourselves a combined chart down below. All right, taking a look as we jump into the long term. Again, a lot of the charts I haven't set up on the euro. We just got that going this week. Price action here again, drawing myself a fib line. Again, if you had a former fib line here on the euro, as we could see the majority downside action, you would have drawn your fib up here to around February 11th. Price action came down to about 38% and popped back up. Again, if this is the high of the euro right now, we can look for price action to come down to a 50% retracement. But again, we know where the daily gaps are, so whichever one wins, the trend is the one we'll follow. So here we are as we're starting to migrate the euro charts. Taking a look at a daily chart, we are definitely to the upside. T3 moving averages in the green, weekly up in the green. The monthly just starting to go green here in March. Look at how many months the euro has been downside. And here on the 50-144, together with the T3 moving average, obviously for the majority of the last couple of weeks, we've been in an uptrend as well. So there's our euro charts. And then wrapping it up on the gold, and we'll add the DAX next week. Price action breaking above the 50, breaking above the 144. A lot of consolidation here. Drawing a fib line now. Based on the fact that we've had a high, price action pulling back, holding at the 23% retracement. Combine that with daily gaps, combine that with open gaps, and then check out your 5144s. And we know that gold, look at that. Out of all these, gold, green, green, green. Remember, almost the opposite of that crude being red for so long. We have gold green for the daily, green for the weekly. We have price action on a monthly finally going green. We're not done with March though yet, but T3 moving averages on the 50, a little bit downside here as market closing itself out. And then here, 5144. Love that 5144. How can you, whether you're trading the ETF, you're on an options here for the front running month on crude, check that out. 50 above 144. Use yourself a T3 moving average. Use the intraday basis to remain in the trend. Everything here. So every time you have a pullback and a re-entry up here, an option to get back in, or at least the bigger picture to let you know, hey, we're okay on the gold. We're still remaining upside. All right, so heading into next week, Jedi traders, we have GDP next Friday. We have jobless claims. Watch that crude report on Wednesday. It has been a mover lately, and PMI on Tuesday. Always watch those Fed speakers. Those Fed speakers start talking, and the market just looking for some inkling of some words to indicate where we are headed this year. Keep your eyes to the global market economy. Great place to check out both the U.S. events and the global market. Hey guys, I want to give a shout out to an awesome little app that I found here at market24hclock.com. Again, market24hclock.com kind of gives you a big picture of the market. I know there's some sites out there. I've seen a lot of them, but someone went ahead and forwarded this to me this week, and I thought I'd share that with you guys. There it is, Market 24-hour clock apps, and shows you when those markets are open. Especially, we're off daylight savings time. Don't forget, Europe has one more week, so the Euro market is closing an hour later. But once they go change their clocks, we'll be back to that 11:30 close time for the market. All right, last shout out. Again, every week you want to check out my website at tradingfibs.com, where I give a recap of the trading session focus. I also do a futures, ETFs, and market cap leaders. I took last week off, so jumping back into it this week, you check it out. You'll see the link for this video there as well. And then as you scroll down, something new I've been getting into is the weekly supplemental technical outlook. A lot of words there, but if I find an acronym for it, I'll let you know. But basically what I'm doing is right now a newsletter that I will be building up over the weeks. Right now, check it out. Obviously, disclaimer, but what I'm looking for is to share with you guys not only the stuff that we talk about here in the video on the futures, but also getting into a lot of the ETF futures. So going ahead and giving you the big technical bias for the week, and then some charts here based on the ETF futures. Also be looking at some individual ETFs here right now, gold in the USO. And so giving you my technical momentum bias. I'll leave the word bias out. It's just technical momentum. Where's the trend strong right now? And then obviously market cap leaders right now that I've been talking about for a while now here: Apple, Amazon, Facebook, Google, Netflix, and Starbucks. So we will continue with those charts, some major resistance lines, watch what to watch for, watching the 144. So pretty excited to be doing this. And then in the next couple weeks, we'll be looking to add some more FX pairs, industry ETFs, and additional ETFs as well. So make sure you come to my website, tradingfibs.com. Check out that weekly newsletter, and hopefully that will give you some supplemental information to your weekly setups. That concludes an insight into the state of the indices. Feel free to stop by at my website or any of my social media outlets to obtain more information. My trading mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs, and as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. And as always, leave your bias at the door when trading. Have yourselves a Blue Zone weekend. Good day, good night, and good trading.